Hey, welcome to Coinglass. On Coinglass, this is a excellent site where we can look at the derivative market. Okay, so when it comes to derivatives, you do not own the underlying asset; you own a contract that represents it. So that's why it calls derivative. It derives from something else. I don't need to own oil. I don't need to own gold, Bitcoin, Tesla, anything that has a derivative contract. I don't have to own it, but I can trade and speculate on its price. And this is a quadrillion-dollar market. It's the largest in the world. Coinglass helps us narrow down and can see a lot of metrics on chain, what's going on in this cryptocurrency market. All right, so I'm on the home page on Coinglass, and you can basically uh, see what's going on as far as futures, dollar index. You can see the amount of volume, value that's worth. You can look at the crypto fear and greed index. Okay, so so let's look at that right now. And on this index, we can go through and we can look right now. 79. It's in the greed territory. Okay, you could go over here. You look at the all. So for the last 291 something days, at one point, the 290 days, there was extreme fear. 783 days of fear. But we can go down to the weekly, monthly. All right. So there was not really extreme fear in last month, but if we go to last year, extreme fear at this level. So what does that mean? Extreme fear. It means when the market was dropping very rapidly, a lot of people were selling. And then when it's greedy, a lot of people was buying. So you can measure these and you can look and see what's happening and you can correlate it with price. All right. So up here you see we can use this as a resistance point. So you see right here where I'm at, uh, this was $11,000 Bitcoin back in June of 2019. But if you look at the fear greed index, we were at extreme greed at 87. Okay. And then we started to uh we started to drop. All right. And then if you see how look at let me scroll this down a little bit more for you guys. All right. So look at this meter, but also look as I'm moving. Okay. So look at the greed, but look at the fear. All right, we had extreme fear in March of 2020. I look at the price on the chart. It's around $7,906.73 for the BTC price. So you see how these extreme fear is when you should be looking to buy an extreme in fear, and you should be looking to sell, or at minimum, you're really sitting on your hands, not doing too much. Okay, now this is very important for derivative contract holders. It's because now they know how to participate in the market, whether or not they should take the opposite of the trades, because they know there's too many people who are greedy and therefore prices may pull back. So you can use this. Now, this breaks it down. Why measure fear and greed? You can read all about it. Uh, Crypto market is very emotional. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. This is a lot of great things that you guys can use here that you can read about. All right, let's go over to open interest. All right. And we're going to scroll all the way down to the bottom, and it's going to break down open interest for you guys so you can understand. Now, so Bitcoin open interest refers to the total number of outstanding futures or option contracts in the market. It is a measure of the amount of money invested in Bitcoin derivatives at any given time. Bitcoin futures and option contracts allow traders to speculate on the price movements of Bitcoin without having to own the underlying asset. Remember, I spoke about that, right? When traders enter into Bitcoin futures or option contracts, the option interest increases. As contracts are closed out or expire, the open interest decreases. All right. Let's go down and look at this. People often say that there are more buyers or more sellers in a particular market, but this is not accurate. Open interest is important to understand that every buyer must have a seller or vice versa. To illustrate this, let's say that there are three traders who meet in a newly established market with an open interest of zero and a price of $100. Trader A thinks the market will go up, while Trader B thinks the market will go down. Trader A places a limit buy order at $100, and Trader B decides to match the buy order and open a short position. At this point, the open interest of the market becomes one due to a long and short position being open at the same time. The market goes up to $150, and Trader C also decides to take a long position. At 150, a trader decides that $50 profit is enough and places an order to sell one of their contracts. Trader C matches this order and now holds a long contract. Has open interest changed? No. All right. All right. We have one long position is exiting. Remember, you become a short when you sell an opening position, and one long position entering the market. The market continues to go up, and at $200, Trader B decides to exit. Trader B places a limit order at $200, and Trader C decides to match the order for a $50 profit. In this case, both Trader B and Trader C exit their positions, and the open interest drops back down to zero. In this example, you can see that there are three possible outcomes for open interest. If both buyers and sellers increase, open interest will increase. If both buyers and sellers close their positions, open interest decrease. If one side opens new positions while the other side is closing their position, open interest remains the same. So why does the underlying asset price change when every buyer must be a seller and vice versa? One of the reasons why trading in most markets is relatively easy is that there are market participants who are delta neutral. All right. So overall, Bitcoin open interest is an important metric in a cryptocurrency market as it provides valuable insights into market sentiment, trading activity, and liquidity. Okay. So I get down the spiel. All right. If you need more examples of that, of course, you can go Google, look at some YouTube videos to get more, on that. Um, Now, I like to look at liquidation, and the liquidation can give me a lot. Okay, so right now, if I'm on all, it's going to give me all the exchanges. Right now, last 4 hours, we have had 84% that have been long, uh, but there have been liquidation. So 84% of the loans have been liquidated. Over here, you have real time liquidation going on. And let's see. All right. All right. So now it's moving again. So you see how it's moving. So these are all the cryptocurrencies, but I can focus only on Bitcoin if I want to. So a few minutes ago, $3,000 worth was just liquidated. We got $20,000 at 95 that was liquidated. So if I hover back off of it, it should start back up. So whenever you hover over it, it stops moving. So let's see if we get it back. There it goes. See how it's moving? So it's in real time right now. So these are all the liquidations that are occurring. You see, so if you want to look at different values, you want to look at all the ones that's in the millions. So I just clicked on the 1 million. These are all liquidations that are happening in real time right now. So somebody just got liquidated for one basically $1 million, 1.06 mil on XRP. Somebody got liquidated for 1.91 mil. Whoever was short, all right. So the red would represent the short ones. Whoever was short got liquidated. So maybe Ethereum price maybe had made a little decent little rally before presuming lower. Okay, and then you also got liquidation charts where you can see also at different levels the amount of money. So um, let's go to the last hour on this chart. So let's see. This is all these are all hourly. So I'm on December 26th. All right. So I'm gonna go back. 4.36 million longs total have been liquidated, and we all know that the market has been in a correction. All right, this is a 30-minute chart. We see since 7 o'clock p.m., we had a liquidity sweep up here, and we moved lower down to this level. So this is a major drop that we've had. All right, and when you go back and you look, all right, this is what we're seeing in the market, that those longs. So 4.36 million longs. These are people who thought the prices go up. They are being liquidated. Okay. So check out Coinglass. It's a lot on here for you guys to check out and play around with. But for the most part, I like to come over here and I like to see where are most of the longs, the rate, right? What percentage? So of course, 24 hours is the biggest, but if you go down to the hourly, if 92% are long, that means that right now there are a lot of traders in this area who are expecting to see some type of form of bounce. All right. This could give you what a contrarian viewpoint that maybe instead of looking for longs, this thing may come back down and come even lower to wipe those guys out. Okay, because then now it's some form of an imbalance of a lot of long positions, and these long positions provide liquidity for someone who wants to sell. So if they're supposed to be, for every buyer there needs to be a seller, for every seller there needs to be a buyer, then it creates that. Okay, and so these orders could be absorbed by sellers coming in the market for that. Okay. All right. So let's see. That's everything that's on here. Of course, there's more on this site that I want you to go on here and I want you to explore. So try to keep these videos short. All right. So check out Coinglass and go in and look at some of the analytics and just scroll around and have fun. All right. I'll see y'all on the next one. You have a great one.